Okay, good morning, everybody, and welcome to the Daily Energy Markets podcast. It is Wednesday, March 29th, nearly the official end of the first quarter. Everything's changed so much, it's back to nearly feels like the same. We have the A-Star, what was that program? I forget it now. The team that drove around in the big black van, the A-Team, the A-Team. Was that what it's called? It was the A-Team.
It was the
Well,
A-Team,
yeah, it was the A-Team. Okay, somewhere in my scratchy memory is something called the A-Team and Mr. Hutch or Mr. Hulk or whatever his name was. But nonetheless, things change so much. They remain the same, with Brent crude oil trading now above $79 a barrel, up a 0.5% this morning in early Asian trade, a sense of optimism returning to the markets. Peter, has this so-called banking crisis now passed?
Well, Sean, good morning or good evening from wherever you are, and greetings from Sydney. I don't know whether it's past, Sean, but it seems to have lost a little bit of momentum in the last, say, 24 to 48 hours across Main Street and probably Wall Street, and what we experienced last week on Friday with Deutsche Bank and so on. So that really, I think, hit everyone between the eyes and the uneasiness. But I've got to say, crude has been strongly bid up since really sometime Monday, and it's been a big push up. And where we sit now at 79 and change for Brent, as you mentioned, I got WTI nearly 74. It's been a strong belief. We've seen those lows, and this month has been quite extraordinary from those highs that we saw on the 6th of the month. Then it collapsed of St. Patrick's Day, and we've had a nice bounce since then. So maybe it's onward and upward for the rest of the week, Sean.
Peter, perhaps you can shed us some light from your perspective on China's recovery, reopening. The first quarter, generally the tone has been, as expected, I suppose, relatively moderate. What's your outlook for China? Would you concur with that thesis and its outlook going forward?
Well, Sean, we understand where it's situated at the moment. I'm looking at it from an iron ore perspective domestically here, of course, and there's been moved to the upside a little bit as far as base metals. But when I look at the China situation, I think the second quarter they're going to come out of the blocks even harder, and leading into the third quarter, I think relatively strong growth, domestic demand, and I wouldn't be surprised that they'll try and export their way out of any internal issues that they have. The property sector is still a work in progress, and how government's going to manage those expectations. So as we sit here, one would hope that they continue their demand picture across energy, coal, and the consumption across for base metals. So the overall theme, I think, is onward and upward for the Chinese, and relatively good health overall for their economy.
As just to follow up on that, Peter, obviously Australia and Jack Ma had a similar experience over the last few years with sort of this wrong side of China's strict kind of behave yourself policy. We're now seeing Jack Ma back in China, back in the news with some big news about the breakup of his company, by their design or by default. Your thoughts on this new face? Is this a new face? Is it is this a new dawn for that sort of attitude towards China reopening, being more business friendly and so forth?
Well, I would think so, Sean. I mean, it's pretty tough last couple of years for China when you're looking at it, and we understand from the property side, from COVID and all those mechanisms that we needed to basically put to bed. They've come out the other side and they're looking for growth. I understand the Jack Ma situation. We're a proxy in a lot of ways, the Aussie dollar, and it's still languishing at 66 cents. So there hasn't been a lot of whipsawing that we've seen with other markets like yen, or certainly with the euro or pound. So I would hope that we see some good news continuing to flow from China, and the good storyline that'll back our commodity-driven economy to some relatively good strength for the Aussie and for our economy.
Peter, one of the big trend lines, of course, that we have been talking about for a long time, and is obviously tied into that so-called banking crisis and some element of being the trigger of it, i.e. higher interest rates, rapidly rising interest rates. We saw during the red hot center of this recent sort of banking trauma, the ECB raised 50 basis points, the Fed raised 25. Where are we at with that cycle, and where are we at with its impact for the markets, do you think?
Well, Sean, just on that, the Aussies, we released our numbers this afternoon, and it looks like it's going to be a relatively, well, it was more comfortable. I'm not saying that it was anything really that joyous, but it didn't go up.
Australian inflation numbers, basically, you're saying.
Yes, that came through in the last couple of hours, not like what the POMs did last week. So that was a good sign. Now, as far as Jay Powell and his gang, I'm waiting for that PCE inflation data to drop and what happens there. So I think it all hinges, Sean, on what happens with the data. If the data surprises to the upside and it's like the POMs, then I think Jay Powell is onward and upward. And if it's like Australia, and that's the other side of the coin, then there could be a handbrake there, and we may not see a rate rise for maybe a month or two from Jay Powell until it gets a better picture as far as the domestic scene in the States. The silent one is from energy prices. If they continue to climb, then that's not a good sign for Jay Powell and his gang. So we've just got to work through that and see the impact both domestically in the States.
But all being said and done on that, Peter, the another piece, another incremental piece, or not, I mean, the recent trauma of the banking sector has kind of accelerated our arrival at some element of the end of the tightening, whether it's another bit here, another bit there. But the big question seems to be we're left with after this recent trauma is the market predicting a rapid reversal of rates. Not the long hold and pause thing, but now it's, cuts just around the corner. Your thoughts on that as an outlook and what its implications could be for the energy markets?
Well, you see that, Sean. I mean, some of the analysts you listen to, we're saying fourth quarter, you're going to see a big pullback as far as rates. And then you've got another camp out there that are saying it's going to be a continuation to the upside. So we've just got to, again, time is going to be the best friend that we've got to live through this and just see how it all drops. As far as energy, well, I'm sitting here, won't be surprised. I think what we saw in the last couple of weeks was the low for possibly the year. And I'm going to probably suggest maybe 85 to 90 is going to be where we're heading for Brent in the short run, probably by end of April. So it seems to be onward and upward at the moment. That's our viewpoint. And it's one of, let's see where May and June go. But I think there's a lot of issues that have to be worked through yet to get a clean bill of health as we run into third and fourth quarter.
Peter, you get the last word this morning. Respond to that, Neil's comment, but also I wanted to get your insights on Japan and the yen and the outlook for where Japan's economy may be going. Of course, one of the world's biggest gets often forgotten, but its big drama of the last year has been the collapse of the yen, but now the yen seems to be on the move as the sort of European US picture weakens.
Well, first off, Mr. Ueda will be the new governor, Sean. He runs, I think, starts in the next couple of days, early April. And we say good sayonara to Mr. Kuroda. Now, where the yen is, you've got around a 132 handle. It's been very choppy over the last month, and that's been great for traders. So if you're looking where it's been in the last 6 months, it's been nothing short of outstanding. So plenty of opportunity, and I think that better than expected inflation numbers. Again, that was a surprise to the downside for Japanese inflation. So as we look there, we could see a further, I'm not expecting rates to ratchet up very heavily in the next couple of months from Japan. So if they can get inflation under control, then that's going to be a good sign. And the next sign, of course, is you could see a little bit further strength to the upside for the yen. Though we've just got to keep a close eye where that US dollar index is. As far as oil, I think the fund's going to be ahead of us. We bury the first quarter and we go into the second quarter, and I think it could be a quarter of surprises, Sean. So yeah, I'm looking the unsettling situation with France, for instance, the unsettling situation with the Kurds, and I think there's enough um, global surprises that are going to present themselves, and I think that that's going to be bid up as far as oil, and keep an eye on gold.
Well, certainly the banking trauma of the last few weeks, you would say, is 2023's black swan so far, and maybe not the same as the Q1 black swan of Russia's invasion of Ukraine last year, but certainly it turns out to be, at least so far, a mini black swan. But the question then is, as Peter points out, will we have a flock of mini swans this year rather than one monster? The no is the response on the survey. So-called banking crisis now passed. I'll post that on social to get the views there. But we finished the quarter with Brent crude oil averaging above $80. And speaking to my stakeholders in this neighborhood, everybody's delighted with $80. 80 plus is a happy sweet spot, and if we get that with all the traumas of Q1 in Q2, they'll certainly be happy campers in this neighborhood. And of course, the big moment in Q2 will be that OPEC plus meeting in Vienna in June, which will point to the second half of the year, and perhaps that becomes a bigger question as we move deeper into Q2. Just promoting there an interview we have with Adi Imsirovic on HTT, this halftime talk this week, principally because Adi's just come out with a new book, or is about to publish his new book, which attacks the oral history of the Brent contract, for those who are so interested. But it's quite a unique approach. All of the traders and actors who were there through the 80s and played a part in the early decade of Brent, telling their stories. So it's kind of a nice way into that. Thanks, Ole. Really appreciate your insights this morning. Peter McGuire, as always, from Sydney. You can now go to the beach. Neil Atkinson's from Paris. You cannot go to the beach only because it's too far away from Paris. And that's Paris, France, of course. All the best. Have a good day, everybody. Take care. Thank you.
Thank you, Sean. See you, Neil. Thanks, Ollie.